I joke with you, like, how much of the Bitcoin do you want? Oh, I want it all. Well, I'm not going to get it all. I mean, if I work my entire life, I might work my way up to 1% or 1.5% or something if I get very lucky and I'm very diligent and the wind blows in the right direction. But if I do, and if I end up buying $100 billion of this stuff, then there'll be something like $99.9 trillion of Bitcoin for everybody else. You see, some crazy thing, right? You're just going to drive up the value of it in an insane amount. So statistically, 99% of the time, someone's telling you to trade, but you shouldn't. And 1% of the time, everything moves, but generally people can't predict when that 1% is. It'll happen when you least expect it. So trading is, in my opinion, a fool's errand. I think it's a very dangerous thing. And most people are going to squander their capital because they're going to try to outsmart the market. And I think stock picking is equally challenging. I just laid out there's 7,000 publicly traded companies. If you take out the 7 best ones, there is no return. 99.9% of the companies can't beat inflation. Okay, so we know which ones can, like Apple, Google. But the question is, did you know that 10 years ago, the reason I was able to buy 17,000 Bitcoin is because I was able to pick Google and Apple and Amazon in 2010 and hold it for a decade with a lot of money, right? But on the other hand, if you picked Amazon in the summer of 2020, you didn't make any money. You know what happened in the summer of 2020? I tell you a real story. It's like when my 3 or 4-year-old niece, when she said to me, I like the Big Apple, this was like 2010 or 2008, I said, wow, it's a young girl and she's saying she likes Apple. This means Apple's a big deal. We should load up on the stock. And that was when 98% of the world, or 99% of the world, didn't agree, and they thought it was a stupid idea, and Apple was valued at like 8 times cash flow. And you could have bought it 100x from there or something, just ridiculous. But I thought, yeah, this is a good idea. And I wrote this book, The Mobile Wave, and I actually tell the story in the first chapter of The Mobile Wave about how, my young niece thought Apple was amazing. She called the Big Apple, that was the iPad. And I thought the Big Apple had been New York City, and now the Big Apple is iPad, and this is a big change in wealth. Okay, so that was a good entry point because nobody agreed, but it was unstoppable. That's what I say. The best investment is something everybody needs, nobody can stop, but nobody understands. Right? That's what Apple was. That was what Facebook was. That was what Amazon was in 2008, 2010. Now, in the summer of 2020, you know what my niece told me? She said, I'm buying Amazon stock. Everybody knows it's a winner. Because everybody's in lockdown, and they're all basically ordering, like they're ordering their food in, they're ordering their groceries in. Okay, so everybody knows, every 20-something investor, every Gen Z person knows that they should buy those stocks. Well, it didn't work, right? Because everybody knew it, everybody agreed, everybody needed it, but everybody understood they needed it. And so, in fact, what you've got 36 months later is you have all the logistics challenges, the supply chain challenges, the labor challenges, the inflation challenges, the manufacturing challenges. Everybody needs it, and everybody understands it. But, if the criteria was, do you need it and do you understand it, the richest people in the world would be investors in water companies and electricity companies, because everybody in New York City needs water and power. But name me one billionaire in the 21st century that's a water billionaire or electricity billionaire, And the reason why is because everybody understands it. And once everybody understands it, it's getting regulated. And once it gets regulated, it's not an unregulated monopoly. It's a regulated monopoly. They're not going to raise their prices. And people, people aren't going to, they pay less for their electricity or whatever than they're going to pay for their whatever favorite streaming video thing that's the fad. So, I think that when people, they talk about, oh, the recession's coming or whatever, they're attempting to outstock pick the market. They're attempting to outtrade the market. They're feeding on your gloom and doom. What do they want you to do? Sell your scarce desirable assets and buy the dollar? They want you to go short are you going to sell London real estate to buy the dollar? No, or they want you to sell your desirable assets and give the money to them. It's like I wouldn't trust anybody that basically comes to me with doom and gloom and fear and says, whatever your idea is going to zero, so give me your money. You see, the difference is I'm not asking for your money. I'm telling you, keep it yourself. Just, don't blow it. So if all these things happen, then the governments of the world are going to print more money to solve the problem. If there's war, if there's recession, they're going to print more money and it'll drive up the value of scarce desirable assets. If none of these things happen, they're still going to print more money, right? In good years, they're going to inflate the currency supplies, and bad years, they're going to inflate the currency supply more. And, if you look back for the past 100 years, if you could have bought an acre of real estate in New York or London or Tokyo, at what point would you have sold it? Never. There would have been booms and busts and crises and recessions and whatever. But, the only winning strategy is you hold the most desirable asset for the longest period of time and you let everybody else panic sell. And I think that's the case with Bitcoin right now. I mean, you hold on to it and let everybody else, trade 7,000 different razor blades.
Hey, crypto architects, brace yourselves for the inside scoop on the Bitcoin battleground, where I assume the role of your crypto guide. Today we plunge into the depths beneath $37. 500 questioning whether the King coin is poised for a triumphant surge or if we're on the verge of a crypto cliffhanger. Join me as we untangle this tale. Visualize this. Bitcoin finds itself entangled in a formidable triangle pattern, with the bulls showcasing their strength. The charts echo a bullish sentiment adorned with higher lows and a graceful ascending trend line since October 25th, a stance reminiscent of a crypto superhero. However, in classic crypto fashion, the elusive $37 500 mark remains a tough adversary, tantalizing us with its capricious dance beneath this threshold. Bitcoin's tantalizing waltz below $37 500 feels like a captivating game of cat and mouse, leaving traders yearning for a breakout. The chart suggests a bullish bonanza targeting $40 but there's a formidable fortress ahead, the $41,000 to $43,000 resistance zone. Fibonacci levels are rallying from the sidelines, waving their flags at $41,000 and $46,000. The market is in a jubilant mood, flaunting higher lows, RSI above 50, a rising on balance volume, and a money flow engaging in a lively cha-cha with a +0.8, a veritable crypto carnival where indicators lead the parade. However, a word of caution lingers, a daily close below 350 for $0 could flip the script to bearish now. Let's peek at the exchange chessboard. The past 10 days resembling a battlefield, witnessing more Bitcoin exiting exchanges than entering. It's akin to a treasure hunt, with traders snatching up Bitcoin and securely storing it in private wallets. An accumulation alert signaling the potential precursor to another price surge. The plot thickens, crypto crusaders. This is the ongoing saga of Bitcoin. Will it conquer the formidable $37,500 resistance, soaring to new heights? Or are we on the brink of a market shakeup? Stay tuned as we delve deeper into this narrative with the insights of Michael Saylor.
I think it takes 20 to 30 years for a new technology to diffuse to 80% of the world, or 80% of the educated world. So I think you got to look out over the course of a generation. William Gibson has a famous phrase. He said, the future's already here, but it's not evenly distributed. And so what you have is you're always going to have some people that are going to be very hypersensitive to new technology and others that are going to go slower. There are plenty of people with a lot of money in the US and Europe that don't have smartphones, right? And so the smartphone revolution really kicked off in 2010, and that was 13 or 14 years ago. 2009 was the iPhone 3. So 14 years ago was the smartphone revolution. And if you ask anybody in their teens or 20s or 30s, of course, they grew up with these things. But you'll find a lot of people in their 60s, 70s, 80s that don't have smartphones. And especially, do Warren Buffett and Charlie Munger, do they have smartphones? Like about 4 or 5 years ago, they bought Apple stock, but they still haven't bought Microsoft stock. So, well, what do they have? They have $1 trillion balance sheet. So there's a lot of money in the world that's in the hands of people that don't use the internet, that don't use smartphones, that aren't definitely tech savvy. And so there's going to be a long tail, call it a 20, 30, 40-year tail, where that money is going to gradually get invested and reallocated into the Bitcoin ecosystem. But it's not like in 24 months everybody with money in the world wakes up and realizes this. And I've said, so what's the right forecast? It's highly likely that what you have is a serpentine growth, right? Where you're going to grow with a slope of 40 or 50%, and it's going to be cooling down from 45 to 40 to 35% to 30% to 25 to 22 to 20% annualized over the course of the next 20 years. It's like something like that, but you won't get a perfect exponential. What you'll get is a surge up, followed by a crash down, and you'll have this serpentine pattern growing. So there is a cycle. What will drive the cycle? Lots of dynamics. A regulation will drive the cycle. Halvings will drive the cycle. Awareness will drive the cycle. Apple will drive the cycle. Big tech will drive the cycle. Technology will drive the cycle. War will drive the cycle. Panic, hyperinflation will drive the cycle. And it'll look different depending on what country you live in. For example, Bitcoin is already at all-time highs in places like Argentina, or Lebanon, right? Or if your currency collapses, you're already at the super cycle all-time high. But in other places, it isn't. So you got to consider frame of reference. So I don't think this is a problematic thing. What it means is if you're trading Bitcoin with a time horizon of less than 48 months, then there'll be some point where you might be underwater in your latest purchase. And the important point is not to panic and to look out 10 years. And at the same time, the world's not going to be rational overnight, but you don't want it to be rational overnight because statistically, you're much better off if Bitcoin gradually adjusts up between now and 20 to 30 years from now, if it gradually matures, because that gives you 30 years, the dollar cost average. Yeah, you've got 30 years of earnings ahead of you, and you can sweep those cash flows into Bitcoin at a discounted price. Right? And you've got 30 years of alpha, of knowledge. You're always going to be smarter than, the person 25 years ahead of you who isn't sensitive to the crypto economy, hasn't figured it out yet. And there are a lot of these institutions and governments. Think about it. There are large insurance companies and large governments and bankers. They're going to be 10 years or 20 years after everybody else because there's so much inertia in their governance, right? They might actually evaluate a new idea every 3 years and take another 3 years to study it and implement in another 3 years. And actually introducing a new Treasury Reserve asset in 9 years, that's pretty fast for a country.
If you found value in the content, hit the like button, as that helps us reach more viewers like you. If you're not subscribed, hit the subscribe button as we put out daily content to keep you updated. Thanks for watching, and we'll see you in the next one.